Asia markets mostly rise on hopes of Donald Trump's auto-related levies exemption. Meta faces a landmark antitrust trial as the FTC challenges its acquisitions of Instagram and WhatsApp, alleging monopoly practices. And Chinese President Xi Jinping signed a raft of trade deals with Vietnam. His next stop on his three-nation Southeast Asia tour is Malaysia. Hello, I'm Taiba Aiden with the latest business and finance news here on TRT World. Shares in Asia continue to climb on Tuesday following gains overnight on Wall Street. Markets across the region were up more than 1%, helped by gains in car companies after US President Donald Trump suggested he might grant exemptions on auto-related levies already in place. Chinese shares were flat as trade uncertainty weighed on chip stocks, with the CSI Semiconductor Industry Index down 1.7% and the electronic subindex losing 1.5%, both giving up most of the gains made on Monday. Overnight in the US, all three major benchmarks advanced in a tech rally, but gains were limited as Trump's constant back and forth on tariffs continued to cast uncertainty on the markets and the global economic outlook. And for more, we're joined by Jamil Ahmed in Mexico City. He's chief analyst at forex broker GTC. Good to have you back on the program, Jamil. Now, a sigh of relief after a week of heavy selling across markets. What's helped lift sentiment?
I would say it was the latest rollback when we had the weekend development that it appears that Chinese smartphones and some other products would not be subject to that 145% tariff, and it would stay at 20%. But the key word here is that it's for now. There are a lot of plot twists. There are updates coming in pretty much every hour across different sectors, what different goods. And I think that global financial markets were boosted by the technology rebound we saw on that smartphone move. But there's still other industries. There's a lot of uncertainty. And I'm not going to say that we are out of the woods. Let's see what the latest headlines are from Washington as well as Beijing, as this appears to be a very sentiment and headline-driven financial market atmosphere, and nobody knows which direction this plot twist might head next.
Right, and let's talk about these exemptions. There's a lot of uncertainty there. We're seeing electronics first being exempt, and now talks of auto imports. Do you see this as Trump backing down?
Not necessarily. I think that actually we're seeing further escalations. There's no denying here that we're not necessarily just at a trade war. We're looking at a potential economic war between the world's largest one and two economies of the world. You've got some tariffs on Chinese goods as high as 145%. On the other end, we've got some tariffs on US goods as high as 125%. So I wouldn't say that this is somebody backing down. Again, by this time tomorrow, these headlines could completely change. We could have extra tariffs. We could have these tariffs being reduced. Nobody's any of the wiser. We would have had this interview just a week ago. We were talking about retaliatory tariffs on so many different trading partners. Of course, that has been rolled back, but nobody knows which way this is going to head next.
Right. Meanwhile, investors are also bracing for some earnings this week, particularly US banks. What could these earnings tell us about the state of the US economy in the wake of these tariffs?
Not enough yet, because we haven't seen the impact yet on consumer sentiment and consumer spending. It will take a couple of months to see what impact this might have on tariffs. Of course, some industries are already suggesting warnings about what the impact will be on price rises. But I would say if you look at some of the economic data releases that we even had last week, they were completely ignored because the market is completely being swayed by these headlines. So there is a chance and potential that these earnings that are coming out, maybe there won't be much market noise or headlines at all, because everything's very dependent on this very erratic and ever-changing landscape around trade tariffs and trade tensions and which way this might be headed next.
Ever-changing indeed. Jamil Ahmed, chief analyst at GTC, thank you very much for joining us. A high-profile legal battle kicked off in Washington on Monday. US regulators are taking Meta to court, saying its past takeovers crushed competition. The trial could force Mark Zuckerberg to break up the company. Let's take a closer look.
Meta faces a major antitrust trial in Washington. accused of illegally monopolizing social media. The U.S. Federal Trade Commission says Meta's takeover of Instagram and WhatsApp gave it unfair control over personal networking. Meta bought Instagram in 2012 for $1 billion and WhatsApp in 2014 for $19 billion. Both deals were approved. The Commission now wants Meta to sell off both platforms, saying the deals hurt innovation and choice. But the social media giant argues that the acquisitions help grow Instagram and WhatsApp, benefiting users and the economy. The Commission claims Meta controls the personal social networking space with no major alternatives. CEO Mark Zuckerberg is also expected to testify during the trial. If the Commission wins, it could reshape the future of tech mergers and how regulators review past deals. Meta says the case defies reality and warns it could make past mergers seem never truly final.
For more, we're joined by Matthias Kettermann, Professor of Innovation Theory and Philosophy of Law at the Institute for Theory and Future of Law at University of Innsbruck. Welcome back to TRT World, Matthias. Now, what are the potential implications for Meta if the FTC succeeds in forcing it to divest Instagram and WhatsApp?
That would be a catastrophe for Meta. Instagram is its cash cow. It makes a tremendous amount of money inside of the US through ads on Instagram. If it had to divest itself, it would suffer greatly. And that's why it's fighting tooth and nail to keep its two cash cows.
Right, now how does the FTC's definition of the, quote, personal social networking market influence the strength of its case against Meta?
It's a weak case. The social networking market has changed dramatically. The FTC argues that this is a personal social networking market where only Snapchat and a very small other platform are competing. But what about TikTok? The FTC is the only body, the only group of experts who thinks that Snapchat isn't also the other products like TikTok aren't also a competitor. It makes the case that with friends and family you use Meta products, with others you use different products, and that's just not the reality.
Yes, and you mentioned TikTok there. And how does Meta's defense that it faces significant competition from the likes of TikTok as well as YouTube challenge the FTC's allegations of monopoly?
They're basically baseless, the allegations from the FTC, but that's the way we look at it now. When the products were acquired over the last years, definitely the acquisition had a negative effect on user experience. If you look at Instagram and compare that to alternatives like Blue Sky, you will see that Instagram is full of ads. Why? Well, because Facebook could do that. We're seeing, also privacy costs. We're seeing development costs and innovation costs. The more, the less development, the less companies exist, the fewer choices people have. That's true. But I wouldn't, and most experts would agree that this is not a monopoly in any sort of way.
And what could Instagram look like if Meta is forced to divest?
I would expect it to be a less consumer-oriented a platform. It would have to redraw it would have to compete on the terms of the other platforms like TikTok. It would have to reduce the ad load. Facebook would have to substantially invest in recommender algorithms, in the AI tools. I don't think that this would be a substantially great idea, a great development for Facebook.
And how could this trial set a precedent for future antitrust actions against major tech companies?
Well, when the acquisition took place, the FTC voted unanimously to allow it. This just shows you how difficult it is to predict the future. The case was weak from the start. It was filed in the first Trump administration, then refiled because of errors in the first submission. Now it's has been filed again, and now it's coming to trial. It's so difficult to predict what will happen. It's also difficult to predict whether the Trump administration will honor the outcome of the trial. having illegally fired 2 FTC members already of the Federal Trade Commission responsible for suing. Generally, it's a good development that this trial exists because it sort of pushed Facebook to not buy up other companies. So it was sort of a background reminder that there's somebody watching. Mm-hmm. Insofar, the trial itself is good, even though it most likely will not lead to any divestiture obligation for Facebook.
Right, and we will have to wait and see how it all plays out. Professor Matthias Kettermann from the University of Innsbruck, thank you very much for your analysis. Now, a quick look at some of the other top business stories from around the world. South Korea has announced a $4.9 billion push for its chip industry in the wake of US President Donald Trump's tariffs on semiconductors. It follows the rolling out of a $10 billion support plan for its auto sector this year. With companies like Samsung and SK Hynix seeing their stocks slide, officials are trying to provide support. Argentina's peso fell more than 11% against the dollar on Monday after President Javier Milei's government loosened currency controls to secure a $20 billion IMF deal. The peso is now hovering near 1,200 per dollar, landing in the middle of a new trading band. A weaker peso could boost exports, but it also means pricier imports. The world's top EV battery maker CATL has reported a 33% jump in first quarter profits to just under $2 billion. That's despite a slowdown in EV demand. Powering more than a third of all EV batteries globally, CATL produces for big names like Tesla, BMW and Volkswagen. The firm also saw a 6.2% rise in sales, proving it's still charging ahead while others cool off. And shares in LVMH slumped 7% after the world's largest luxury group reported disappointing first quarter results. Revenues declined 3% in the first 3 months of the year, hit by lower demand in China and the US. The company is now bracing for the fallout from US President Donald Trump's tariffs, which could further hit sales in the second quarter. Chinese President Xi Jinping has begun a 3-nation tour of Southeast Asia, aiming to strengthen regional ties in the face of sweeping US tariffs. But the trip also highlights the diplomatic balancing act countries in the region face as they seek relief from the tariffs. Xi's first stop was Vietnam on Monday, his first overseas visit of the year. The countries signed dozens of cooperation agreements, including on supply chains and railway connectivity. China has long been Vietnam's top trading partner, with bilateral trade reaching $260 billion last year. But the US, Vietnam's second largest partner, is also vital, with two-way trade totaling $150 billion. That relationship now faces strain as Washington slaps a 46% tariff on Vietnamese imports. Xi is traveling to Malaysia on Tuesday, where more deals are expected. China has been Malaysia's largest trading partner for 16 consecutive years, with bilateral trade totaling $110 billion. Meanwhile, Malaysian exports to the US, valued at half that at around $50 billion, now face a 24% tariff. Key sectors like semiconductors have been temporarily spared, but uncertainty lingers. Xi is set to conclude his tour in Cambodia on Friday, his first visit there in nearly a decade. The trip comes at a time when US aid cuts have led to the shutdown of critical programs in health, sanitation and mine clearing. That's creating a vacuum China is eager to fill through its own development initiatives. And since Trump imposed tariffs on Chinese goods in his first term, countries in Southeast Asia became a backdoor route for those products to reach the US. That made the region a new target for high US tariffs. And with cheap Chinese goods now unable to enter the US, the region also fears a surge of imports that could flood their markets and threaten local industries. For more on this, we're joined by Shrikant Kondapalli, who's in New Delhi, a professor of Chinese studies at the Jawaharlal Nehru University. Welcome back, Professor. Now, how is Xi Jinping's Southeast Asia tour influencing regional alliances in light of recent US tariffs?
I think Southeast Asia is in a sweet spot now because of the conflict between United States and China on the tariffs. As you mentioned, Trump administration has imposed a lot of tariffs on everybody, including on China and Southeast Asia. But Southeast Asian countries have got a reprieve for 90 days. And this is a period of preparation by Southeast Asian countries and China. And so this visit, even though it is structured, announced long ago, but this comes in the wake of the tariff wars, and so it acquires a lot of significance from the point of view of how to cope up with the tariff wars, number one. Number two, there is also the problems that Southeast Asian countries are facing with that of China, specifically on South China Sea. Vietnam, for example, has been at a receiving end in terms of the Chinese forays in the South China Sea, in the Gulf of Tonkin. And Malaysia has also problems in terms of the Chinese deployment of rigs closer to the Malaysian EEZs. So the sweet spot here is that Southeast Asian countries, specifically Vietnam, Malaysia, are going to extract some concessions from China, both in terms of the economic as well as on security-related matters. As we just saw, Vietnam had signed 45 agreements with China during the President Xi Jinping's current visit. And one of these is the civil aviation agreement. Then there is also the trade agreements. For Vietnam, it is to balance between United States and China in the tariff war, because as you mentioned, there is 46% tariffs on Vietnam as well. So that need to be renegotiated. And that is where I think Vietnam is going to balance its relations between Beijing and Washington, D.C. Malaysia is also likely to play a similar role. But in terms of Cambodia, it would be a different ball of different situation where more socioeconomic issues are to be raised.
Right, and you mentioned Cambodia there. So in what ways is China leveraging development aid there following the US's aid reductions?
The U.S. aid program has been canceled, as you know, by the Trump administration. And it created a lot of vacuum in many countries, including in Cambodia, specifically in terms of the healthcare, education, and other soft infrastructure related matters. Cambodia and China actually have been cooperating for over a long period of time on these issues and also on other economic issues, such as infrastructure and others. So from the point of view of aid programs, I think we will see the visit in a few days to Cambodia will result in more agreements between China and Cambodia on health, education, and literacy and other matters. As part of the Belt and Road Initiative, China has undertaken some of the people-to-people contacts as well as educational. They have provided a lot of scholarships to the Cambodian students, not just now, even 2-3 decades ago, this has been going on, but this will be scaled up in the near future. Also in terms of what the Chinese have mentioned as the health Silk Road, we are likely to see many agreements in this regard.
Right, Professor Shrikant Kondapalli from the Jawaharlal Nehru University, thank you very much for being with us. Now, at the 4th Antalya Diplomacy Forum, business leaders and ministers gathered to tackle some of today's most pressing global challenges. Among the key concerns for the global economy was how to navigate the impact of US President Trump's tariff policies, a topic that drew particular interest from Malaysian analysts. Emre Boz was on the ground covering the event.
We're here at the Antalya Diplomacy Forum, and joining me is Professor Faiz, the chairman of the Institute of International and Strategic Studies. Thank you for joining us today. And we would like to ask you, given this global environment of economic uncertainty, how is the Malaysian economy and what are its policies in response to growing isolation and protectionism, as we could see with Donald Trump's tariff policies?
Thank you for having me. First and foremost, Malaysian economy is doing very well. We are projected from easily 4.5 to 5.5 for this year. But as you know, with the Trump 2.0 tariffs, it has thrown a curveball, well, not just to Malaysia, but to almost the rest of the world, and particularly in relation to ASEAN member states as well. But Malaysia, while we regard this policy, which is, of course, now has got a 90-day so-called moratorium, is against the principle of the GATT and then eventually against the basic rules, what we call the rules-based system, even if you look at the World Trade Organization. But having said that, Malaysia is not panicking. Malaysia is not going to be hysterical or to, as they say, retaliate. We will act calmly. And we will have taken certain measures by, for example, calling in the respective ministers within the ASEAN member states to have a consensus-building situation on how to deal with this. The so-called percentage has been given to Malaysia in relation to the tariffs. A big portion is exempted in relation to semiconductors, which is a huge part of what we have. But we have to factor in that there will be some negative effects. But as they say, the rule of the game here is to act calmly and not to act irrationally.
And given that we're here at the Antalya Diplomacy Forum, the emphasis on diplomacy and partnerships, how do you envision the future? Is it necessary to build partnerships given the environment of global economic uncertainty?
I think the Antalya Diplomacy Forum couldn't have come at a better time. I mean, it's been on for some time, but this is, in fact, one of the great moments where, coincidentally with the situation that's developing because of a breakdown in terms of multipolarity, in terms of multilateral trade, and in terms of the rules-based world order, I think this is an opportunity for countries who value the importance of free trade and observing the rules to state their position on how important it is not to go alone.
Now, the auto industry has been one of the hardest hit by US President Donald Trump's tariffs on imports. Car makers around the world are now cautiously suspending production and laying off employees to adjust to Trump's new trade strategies, as Panani Shasta reports.
A shockwave has hit several industries around the world. US President Donald Trump has shaken the global markets in his second term in the Oval Office, starting from a minimum 10%. Over 100 countries have been imposed tariffs on their exports to the US. US President Donald Trump's now infamous tariffs have already had a severe impact on an already struggling car industry. Some automakers have responded to the vehicle tariffs by closing factories, laying off workers, or shifting production. The European car giant Volkswagen, with its brands Audi and Porsche, is the worst affected, as Trump has imposed 25% tariffs on imported vehicles and parts.
Volkswagen produces only 21% of its cars sold in the US on location. That means the rest of the cars come from Mexico and Europe. That's why the company is very, very heavily affected by these tariffs.
In 2024, the car giant was already planning cost-cutting, sparking mass protests.
We had to announce that the board intends to close at least 3 sites, carry out mass redundancies for all other sites, and reduce the number of products and for all other employees who are still allowed to work for Volkswagen.
The US is the biggest export destination for the European auto industry, supporting 13.8 million jobs, or 6.1% of total EU employment.
If vehicle sales stall, manufacturing will stop. The car companies will not keep building cars if they can't sell them. They just can't do that, and they won't. So if they're not building cars, they will lay the workers off. This will snowball through the entire economy of the globe.
Another German car maker, BMW, has announced that it expected a $1.09 billion hit to its 2025 earnings.
Tariff discussions, tariff wars, tariff disputes ultimately hurt everyone. We remain confident that everyone will soon realize that there are no winners in these disputes.
Meanwhile, in the UK, car makers are also battling. Right after the announcement of tariffs, British car maker Jaguar Land Rover has announced that it will pause shipments of its British-made cars to the United States for a month. Britain's car industry employs 200,000 people directly. The United States is the second biggest importer of British-made cars after the European Union, with nearly a 20% share.
25% tariffs on automotive exports and 10% on other goods. That is a huge challenge for our future, and the global economic consequences could be profound.
American car makers are also negatively impacted by the tariffs. They have pressured automakers to make production changes with General Motors, temporarily shutting down production at 2 plants in Mexico and in Canada, and thus affecting 5 US facilities that are connected to them.
Financial markets really reacted with shock. In negative, we saw that the share prices for not only European car manufacturers, but also for US car manufacturers went down.
Ford Motor and Stellantis have already upped their incentive offers to ease consumers' concerns about the duties, adding to vehicle prices. Analysts have projected that sustained tariffs will increase prices by thousands of dollars. Experts say the global auto industry is expected to shrink as car giants brace for a bumpy road ahead. Pinar Nishasta, TRT World.
Well, that's all your business news for now. Thanks for watching.